It's not about picking stocks. It's about picking the right portfolio.
First on, look at this bull market. Look at this chart. Look at that. Like AI, don't ask why. I mean, this thing is just straight up. And again, it's not, this is the dollar, of course, against the yen, which is one of our long-standing risk range signals that you can see in that product. And I think Rooster and Jonesy are going to go through some of the new products that we've launched, including Hedgeye AI. But this isn't like just a local high. This is like a 3-year high. And this continues to reflect our view that the Japanese have easy monetary policy, whereas the Fed has tight monetary policy. Now, not everybody completely understands that. If they did, they'd be talking about the bull market and the dollar all the time against the yen. We don't talk about it all the time because when we win, we expect to win, and we just ride those winners. So that's been, this dollar position's been riding for quite some time against the yen, and I just wanted to reiterate that this morning. Point number 2 is really, concomitant with that point is what's happening on the short end of the curve. So you can see the 2-year yield hasn't moved 1 basis point in 24 hours. When I look at it in rate of change terms, 24 hours ago versus now, it hasn't moved, right? Now, everybody needs and wants to believe that bond yields are going down, therefore you got to buy, the 7 stocks that everybody already owns. Well, that's fine, but it doesn't say anything about next week's inflation report. And it certainly doesn't say anything about 8 days from now where the U.S. government could be shut down. You know about that, right? If you've listened to the call, we review it every single day. JT Taylor, who's out here in Chicago, will remind clients of that, is that government shutdown risk or U.S. sovereign credit risk is priced into bond yields to some degree, but not fully. So those 2 things, again, they're not yesterday's news, they're tomorrow's news. What we're trying to do is use the currency market, the bond market, equity markets, commodity markets to front run. Again, we're trying to use these signals to front run the future in terms of economic reality. So there's that. I mean, obviously oil is collapsing now, heading into crash mode, down 19%, since Q3 GDP was up. And look at the Russell 2000. I mean, it was down for the 3rd day in a row. Spy Monkey was up for the 8th straight day, barely. And again, the components are what they are. Like 60% of stocks were down with an average decline, as you can see in the Tier 1 Alpha data, an average decline of 1.1%. But the Russell 2000 has been a great short. I mean, it's been a great short since we put it on. It's down almost 30% from when we went bearish. It's down 14.6% since July, like those big July lower highs. So half of the return on the short side has been earned by fully aware, full cycle investors since July. Never mind going all the way back to January or really November of 2021 when the mother of all bubbles came to be, in which, as you all know, the mother of all bubbles, if it wasn't the mother of all bubbles, you wouldn't have the MM7. You wouldn't have these 7 stocks.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.